Hello everyone, this is CA.Tejeshwini Chiranjeevi. In this video, let's try to understand about the section 80C. See, section 80C basically, this is a section which is coming under the deduction chapter, deductions from your GTI under chapter 6A, wherein you making a certain investments over here as specified by the government, as specified by the income tax department. They are stating you make investments, you put your money into this as an investments, we are going to give you deductions. But yes, it is restricted this section of ATC, if you're making an investment of, let's consider 2 lakh or something for that matter, as of now, it is restricted to 1 lakh 50,000. Okay, I'm only sticking to ATC. There is another sections also that is ATCCC, ATCCD1. All these three sections combined, you are going to get 1 lakh 50,000 as deduction, but we are only looking into ATC section over here in this particular. Okay, let's stick to it. See, section 80C, wherein you have invested your money or put your money into this unit linked insurance plan of 1971 for that matter, or contributions in unit linked insurance plan of LIC mutual fund. And in case of, for that matter, what is going to happen is very simple. You will get the deduction for whatever amount that you have invested in up to a maximum extent of how much 1,50,000, not more than that. See, premium paid in respect of life insurance policy. You have a life insurance policy wherein the premium has been paid for an individual, spouse, or any child. It can be major or minor, but it is maximum allowed as per this chart. That is nothing but if you have, see, all of us might have known this life insurance, whatever would be taken, it is not taken for short term, it is taken for long term, right? So, if the long term is the case, if it is before 31st March 2020, 12, life insurance policy taken before this date is what I mean. Then you will get 20% of the actual capital sum assured. Maximum to that extent, you will get what? You will get your deduction under section 80C. What if this has been taken, policy has been taken in between this period, that is between 1/4/2012 to 1/4/2013? Then in that case, you will get only 10% of the actual capital sum assured. That is, if you have assured 1 crore rupees for that matter, maximum of 10%, that is 10 lakh. 10 lakh will be the within eligibility for this one. But overall limit under section 80C, it will again be 1.5 lakh. Remember. It's just that within the limit, they have given you certain eligibility. If it is taken on or after 1/4/2012, then if the person is suffering from 80U disability, 80U is nothing but the section wherein they give the benefits. That is, they give you deduction, additional deduction under section 80U. They are coming under the permanent disabled or severely disabled, or any other ailments which are coming under 80DDD, 80DDB. That is also a section wherein the person is suffering a having a serious disease for that matter. In that case, that fellow or that person can take maximum of 15% of the actual capital sum assured. So if the policy is for someone other than this 80U or 80DD, 80DDP disabled person, then 10% of the actual capital sum assured can be taken as the deduction. So if the premium is paid for the contract for the deferred annuity, or if the premium is been wherein any amount has been deducted by the employer side, that is by the employee for deferred annuity, contribution which is made to SPF, statutory provident fund, public provident fund, and recognized provident fund. Remember, unrecognized provident fund is not covered here, so please be careful. Contribution to approved superannuation fund, any sum paid or deposited in Sukanya Samruddhi scheme, over year also you will get your deduction for that matter. Subscription to national savings certificate, national savings certificate 8, contribution to the approved annuity of LIC, subscription towards the notified units of the mutual funds or the UTI, contribution to the notified pension fund, contribution to national house tax term deposit scheme 2008, contribution to the notified deposit scheme, payment of tuition fees for any universities or colleges for that matter, but it has to be within India for a full-time education, and you can take for a maximum of how much? Two children only. You are paying the tuition fees for the child who is studying outside India, then you can't take this deduction. Very well. It's been specified. They want the education and everything to be done within India. Yes, you do it and you take deduction. What is that? Repayment of the housing loan. Uh, See, remember, this is repayment of housing loan. Principal portion is what they're speaking about. Interest, we already have other deduction called as 24B, and under section 80E series also we'll get the deduction that is different. But remember, interest also there is deduction separately. This is the principal payment which they are speaking about. Principal repayment of housing loan. Subscription to the certain equity shares of the debentures. Subscription to the certain units of the mutual fund. Investments in the 5-year term deposit, that is for a maximum term deposit of how much? 1,50,000. Subscription to the notified bond issued by the NABARD. Investments in the 5-year post office term deposit. Deposit in senior citizen savings scheme rules. Contribution to the additional account under NPS. All these points which we discussed, you put in money over there, you will get a maximum deduction of how much? Maximum is what I speak about. So if you have put your money under this, let's consider in this 5-year post office term time deposit for that matter, 1,20,000. Or a maximum you'll get only 1,20 years. 1,20 in this situation. 1,50,000 maximum I'm speaking about, where you have invested 1,80, maximum you'll get is only 1,50. This is about your section 80.